Hey, it's Randy from Funeral Funds of America. In this video, I'm going to share with you the actual pricing for $5,000 worth of burial, cremation, final expense, life insurance, or funeral funds for a 59-year-old female. Now, first thing I recommend is you go directly to our website at funeralfunds.com, and we've got these free quoters on just about every page, and you just select the state that you live in. We are licensed in all 50 states, by the way. Select the coverage amount, put your birthday, other info, click Get Quotes Now. It will take you to a page that's going to show you the best insurance companies that are going to offer the lowest rates based off your age, gender, and the state that you live in. And it's really terrific. Take advantage of that. You can also call us at 888-862-9456, and we will do all that work for you. And we can actually tell you exactly what you're going to qualify for as well. Now, the first thing we always recommend when talking to a 59-year-old female looking for $5,000 is just say, hey, is that going to be enough for your final expense needs? And typically that final expense needs is going to be either a cremation or a burial. So let's talk about the cremation first. The average cost of a cremation in the United States right now is right around $1,000 to $2,000 on average. That's where you just come home in a cardboard box or an urn, nothing fancy. And if you're going to have some sort of ceremony like a celebration of life or remembrance ceremony on top of the cremation, that's probably going to be $3,500 to $4,500, depending what part of the country you're in. Now, the question is, how much coverage do you need for both of those options? So if you're going to have that cremation where you come home in a cardboard box or an urn, then we would typically recommend $5,000 to $7,000 coverage. That's what most people are getting. But a lot of people would say, well, Randy, you said the cremation is going to be around $2,000 and you're talking about $5,000 worth of insurance. What's going on there? Well, yeah, that's right. We've got a 59-year-old female who probably wants to make it to 69 and then 79 and maybe even 89. So what we want to do is we just want to provide enough insurance that as time goes on, there's enough to pay for these expenses, because we know that with inflation, prices increase over time. So by getting more coverage than we need right now and locking in the lowest rate based off your current age, we're able to inflation-proof those plans. And then if you do die a little bit sooner, there's a little bit extra money left over, maybe to take care of some other expenses that were kind of not expected, like maybe some medical expenses or credit card expenses that if you'd lived long enough, you would have been able to pay those off. So it works terrific. It works both long-term inflation proofing and short-term providing a little bit extra funds. Now, if you're going to do that cremation and ceremony, we would typically be helping people with $7,000 to $10,000 of coverage on average. And again, just future-proofing the plan for inflation, and then shorter term, if something did happen sooner than anybody expected, you are providing some extra funds there. Now, as far as a burial, the average cost of a burial right now in the United States is right around $10,000. So if you walk into pretty much any funeral home in the United States with a $10,000 check, they should be able to help you out with that. It's hard to imagine they would say no and send you out the door and walk down the street a couple blocks to one of their competitors where they would take your money, I'm sure. But just understand, $10,000 is kind of what the cost is right now, and it's not going to be anything fancy. I can guarantee you that. And also it's not going to be inflation proofed. So typically, the average female that age 59, we would be helping with for a burial, kind of anywhere between 10, 15,000, occasionally even up to 20,000, but 10 to 15,000 in most cases, because we can always add more coverage later. So if your budget's a little bit tight and all you can afford is 10,000, get that in place right now. That locks in your current lowest rate and takes care of most immediate needs, but we can always add more coverage later. So sometimes somebody will come up to us and say, hey, I want to take care of my final expense, but I also want to leave money behind for the kids. So they'll say, share with me what, $30, $40, $50,000 is. And then they'll see that pricing for $50,000 and they go, well, I'm on a fixed or limited income. I can't do all of that. If I can't do everything, I'm not going to do anything. And then what it does is if you don't do anything, now your kids are guaranteed going to have to pay for your final expenses, and they're probably going to have to put it on credit cards. They're probably going to pay 26% interest, and it's going to hurt them so significantly financially. And we have to kind of talk people off the ledge a little bit and say, hey, originally you came here and you wanted to take care of your final expense needs. Why don't we focus on doing that first And then we can always add a separate policy for the kids later if that makes sense to you. And it works really terrific because you've got that one dedicated plan for final expenses, and then you've got control of that other plan for the kids. It's a great way of handling it. Now, one thing we always recommend is getting first day coverage or benefits. We do not recommend those plans that come with 2-year waiting periods at all. We'll talk about that in a minute. But yeah, first day coverage. What that means is hypothetically, if you were approved and qualified for a plan today and accepted, and you died tomorrow, the insurance company would have to write that check for $5,000, $10,000, $15,000, $20,000, $25,000, whatever it is. First day coverage is definitely the best way to go. Now, some people would say, well, you're right, Randy, I do like that first day coverage, but I'm not in the best of health. I've got some health issues, and I know those first day coverage plans ask health questions, and I'm not sure that I qualify. And then, to that we say, hey, that's our problem. That's not your problem. We're the experts here. And the reason we say that is we work with so many different insurance companies. They all ask different health questions. They all have different underwriting. And 90 to 95% of the time, we're getting helping people get approved for first day coverage or benefits. We're terrific at what we do. Really, the only time we wouldn't be able to get you qualified for that is if you waited too long and you had some significant health issues going on, like maybe a terminal illness and you were going to die in the next 12 months, or you had dementia, or you're on dialysis, or you're going into a hospital, or you're in a hospital or a nursing home, something like that. If that were the case, then we would typically refer you out to a different insurance company. The other thing that seems to happen, seems like it happens every week, is somebody will call us up and say, hey, we just had a family member pass away this last week, and they didn't have insurance, and we don't have any money, and the body's down at the funeral home, and the funeral home director's not going to do anything till he gets a check in his hand. So we need to get this insurance really quick so that we can get some money to pay the funeral home director. We have to let the people know that there's no insurance company out there in the United States that they just don't insure dead people. They won't offer a plan on somebody who's already dead. And it's so unfortunate the family member died, but it's also doubly unfortunate that they didn't have this insurance. They didn't do this. They knew they were going to die someday. It's not a surprise. They probably thought about getting this insurance, and they just never did it. They put it off. And then one day they just went and died. And now their family members have to figure out a way to pay for this. And typically that involves putting it on their credit cards at 26% interest. And what a terrible legacy to leave behind. You could have done everything else right in life. And when you just crush people with debt that they weren't expecting at the end of your life, it's just, it's so hard on folks. And so protect your legacy. This insurance is affordable. If things are a little tight, we can always help you start small and add more coverage over time if that's what works best for you. Now, the one thing we don't recommend is those plans with 2-year waiting periods. We talked about that a little bit. So Colonial Penn is a fairly well-known company, I do believe. I mean, they advertise all the time on TV, right? Seems like they got those TV commercials running every 7 minutes or so for that $9.95 plan. But you may not know this, but that $9.95 plan, that is a 2-year waiting period plan. Yuck. You should never accept a 2-year waiting period plan when you can qualify for first day coverage. So yeah, just don't do that. I'm going to show you why here, because it's going to be an expensive mistake if you do that. But yeah, I mean, Colonial Penn's not the only one that offers those 2-year waiting period plans. There's other companies out there too, like Mutual of Omaha, their United of Omaha line, AIG Gerber, so many other companies. And some of these companies have done an amazing job at convincing the American public that the only thing they're going to qualify for over age 50 is a plan with a 2-year waiting period, to which we always say, don't believe such nonsense, because we help people with first day coverage all day long. Now, our 59-year-old female probably just got done watching one of those Colonial Penn TV commercials, and she's probably thinking, you know what? That's such a great commercial. It's so slickly produced. It's got to be true. At 59, I'm probably going to get $20,000, $30,000, $40,000, maybe even $50,000 for only $9.95. I just feel so good about this. And then And then she calls and talks with the Colonial Penn agent, or goes on their website like we've done for you here, and sees that a female age 59 for 1 unit of coverage, $9.95, $9.95. That's only going to pay out $1,565. Now, that's probably enough to pay for a cremation in most parts of the country right now. But it doesn't matter, because this plan, they're going to sock you with a 2-year waiting period. Yeah, they're not going to pay out anything in the first 2 years if you die from a health or medical related cause of death. So yeah, just, you got to be careful with that. Now, some people would say that the companies out there that offer these low teaser rates, they do that not because they want you to buy that low cost coverage, because they'll be happy to show you how minimal that coverage is, but they actually advertise those prices just to get your name and get your info and get you in their marketing funnel. And then when they get you on the phone, they show you how little coverage you're going to get for that teaser rate. And then they start upselling you to more expensive coverage that's much more profitable for them. Now, we would never say the Colonial Penn would do anything like that, but there's some people that say that they kind of suspect that it may be happening. And I guess you may just want to kind of like form your own opinion based on the fact that $9.95 is only going to buy you $1,565, because obviously that doesn't work for a burial. And with the 2-year waiting period, that's probably not going to work for your cremation. And certainly nothing's inflation proof. So let's see, let's try to get around 5,000. Is that going to be 3 units? So you can't get $5,000 for a 59-year-old female on the nose, because they sell by unit. They don't sell by thousands of dollars worth of coverage. So we got to play around. I'm going to be around 4 units. See, that's the deal. I mean, you've got 3 units for $46.95, or you got 4 units for 4 units for $6,000. You don't get the option of like $5,000, which is difficult. So I guess if we want at least $5,000, we're going to have to go with their $6,260 plan for $40 a month, because we can't get $5,000. They won't let you. But let's take a look at what $5,000 would be in first day coverage. So we've got $5,000 right here. We've got female, age 59. Here we go. And let's go back and take a look at this. Again, this is going to be $40. And if we look right here, I want to show you this. 5,000 is going to be $16. I'm going to show you 6,000, because, give me just 1 minute here, because that's, then we'll jump back to the 5,000 for the rest of our stuff here, since that's what you wanted. But 6,000, dollar for dollar. Yeah, they're going to, Colonial Penn's going to charge you right around $40. If we do 5,000, or actually 6,000, let me verify that. Yeah, 6,000. That's going to be right around $19. So Colonial Penn is right at about almost it's probably right at around 200% more expensive than first day coverage. Why would you ever do that? Why would you ever overspend? But let's go back and take a look here. Let's see, let's get back to 5,000. Okay. So yeah, $16. So let's go with that 6,000. Even that's right around $20 more a month. And if you take $20 a month times 12 months, that's going to be right around $240 extra a year that you would overpay. And if our 59-year-old female makes it to age 69, you will have overpaid right around $2,400 more. And you will have got stuck with a 2-year waiting period plan. And you will end up overpaying that $20 with Colonial Penn for the rest of your life, right? If you go down to 5,000, it's what, about $23, $24 a month you would overpay. So we can think of no situation where it's beneficial to you to pay more to an insurance company than you really need to. So yeah, get that level coverage. We can help you get qualified with the lowest price companies and get you that lower pricing and save you that money. We would rather see you keep that money in your bank account rather than put it in the bank account of an insurance company. Let's look at a couple other different companies here. You'll be able to see all these different ones here. Let's just go on down a little bit here. Oh, here's one. Lincoln Heritage. So Lincoln Heritage, they're a fine company, I guess, but look at their pricing. It's like higher That's definitely higher. Why is that, you might say? I mean, it is level coverage, but why is it higher? Well, they've got a deal where they will supposedly, when you pass away, they'll supposedly call 2, 3 different funeral homes to like get you the lowest pricing, and they may do a couple other things as well, but it's not free. You pay for that. There's going to be a cost for that, and it's included in the premium. So this is basically $24 versus 17. It's like $7 more a month, and you may go, $7 is not that much. Yeah, it'd be nice if they did that. But so $7 a month times 12 months is going to be $84. If our 59-year-old female lives to age 69, you will have overpaid $840. And you may go, that's not that much for them to do that. But think about it. Is it worth paying an insurance company $840 roughly to make 2 or 3 phone calls and do a couple other things that may only take an hour or so to do? Most people would say that's a pretty good payday for the insurance company. And we just don't recommend you don't do that, because what if you live 20 or 30 years? You will keep overpaying, and it'll jump to like $1,600 and then $2,400. It just gets more and more as time goes on. So again, we recommend you keep that money in your own pocket and don't put it in the pocket of an insurance company into their bank account. What we recommend you do is let us help you get approved for the lowest rate. And then what we provide, free of charge, by the way, is you can download a free funeral and estate planning guide off of our website. And once you download that, you just print it out. And once it's printed out, you fill it out. And you write down who gets what and what goes where and what you want to happen after you're gone. And then you just keep that with your insurance policy. And when you pass away, your family members go to that one place, and they'll find both of those, and they'll know that you not only protected them financially with the insurance policy, but emotionally with the funeral and estate planning guide. Because all they need to do is open up that funeral and estate planning guide and just start reading what your wishes were for them. And everything that you've listed in there, you've provided the money to take care of with the insurance. What a wonderful gift to leave behind. They will know that you not only loved and protected them in life, but you also loved and protected them that one last time in death, exactly when they would need you the most when you weren't there. And what a wonderful legacy to leave behind. So if you'd like to leave that legacy, reach out to us at funeralfunds.com. We've actually got a special quote for our YouTube visitors, funeralfunds.com/YouTube, and you can access the best companies with the lowest rates. Take full advantage of that. It's a terrific thing to take advantage of. Or you can call us at 888-862-9456. One of our agents can help you out with this. But if you've got a policy already and you just want us to price shop it to see if we can save you money, or you want to add coverage to that, we can help you out with that. If you're looking for a brand new plan, or you just had some questions or wanted some help or needed to understand something better, we can help you out with that. But we look forward to helping you get the most amount of coverage for the least amount of money. We will be blessed to help you with that at some point in the future. Until that day comes, you stay safe, you take care, you have a nice day. Bye-bye.